For much of the 20th century, Sears represented American retail success, pioneering department stores and mail-order catalogs. The company symbolized innovation and reliability, offering a wide range of products, from clothing to appliances. At its peak, Sears was more than just a store. It was an institution. However, in the 21st century, Sears became a cautionary tale of corporate mismanagement and failure to adapt to a changing retail landscape. Once the largest retailer in the world, it now has only a few stores left. Founded in 1892 by Richard Sears and Alva Roebuck, the company started as a mail-order catalog business, revolutionizing shopping for rural America by delivering products directly to doorsteps. The Sears catalog became a household staple, featuring everything from clothing to prefabricated homes. By the mid-20th century, Sears had transitioned from mail-order to brick-and-mortar retail, opening department stores across the United States. These stores were strategically located in suburban shopping malls, booming in post-World War II America. Sears became a one-stop shop for families, offering everything they needed under one roof. Its in-house brands, such as Kenmore appliances, Craftsman tools, and Die-Hard batteries, became trusted names on their own. For decades, Sears was the largest retailer in America, a position it maintained until the 1980s. The company's success was driven by its ability to innovate, vast product selection, and reputation for quality and customer service. Sears' decline didn't happen overnight. The seeds of its downfall were sown as early as the 1980s, when the company began to lose focus on its core retail business. During this period, Sears diversified into unrelated industries, acquiring financial services companies like Coldwell Banker, Dean Witter, and Allstate Insurance. While these ventures were profitable, they distracted Sears from the retail market, which was becoming increasingly competitive. At the same time, new competitors like Walmart and Target were emerging, offering lower prices and a more streamlined shopping experience. Sears struggled to compete with these discount retailers, which were more efficient and better attuned to modern consumers' needs. The rise of e-commerce in the late 1990s and early 2000s further accelerated Sears' decline. Companies like Amazon revolutionized the retail industry by providing convenience, competitive pricing, and an extensive selection of products available at the click of a button. Once a pioneer in mail-order catalogs, Sears was surprisingly slow to embrace online shopping. While competitors like Walmart and Target invested heavily in e-commerce platforms, Sears lagged behind, failing to establish a compelling online presence. By the time the company attempted to catch up, it was already too late. Consumers had altered their shopping habits, and Sears was no longer top of mind. One of the biggest factors in Sears' decline was poor management. In 2005, Sears merged with Kmart in a deal orchestrated by hedge fund manager Eddie Lampert, who became the CEO of Sears Holdings. However, his leadership style and strategies faced widespread criticism. Instead of investing in the modernization of stores or enhancing the customer experience, Lampert focused on cost-cutting and financial engineering. As a result, Sears stores became increasingly outdated and uninviting, with many locations suffering from poor maintenance and a lack of inventory. Customers who had once trusted Sears for quality and reliability began to look elsewhere. Lampert's approach also included selling off valuable assets, such as real estate and the company's iconic brands, including Craftsman tools, which were sold to Stanley Black & Decker. While these moves generated short-term cash, they weakened the company's long-term prospects. As the retail landscape evolved, Sears failed to adapt to changing consumer preferences. The company continued to rely on its traditional department store model, even as shoppers gravitated towards specialty retailers and online shopping. Sears struggled to attract younger customers, who were drawn to modern, tech-savvy brands and retailers that offered unique shopping experiences. While competitors like Target successfully rebranded themselves to appeal to millennials, Sears remained stuck in the past and could not shed its image as an outdated retailer. Another significant misstep was the company's failure to invest in its private label brands, which had previously been a key strength. Although Kenmore and Craftsman remained popular, Sears took little action to innovate or expand these brands, allowing competitors to fill the void. By 2010, Sears was in a downward spiral. Sales continued to decline, and the company was unable to turn a profit. In 2018, Sears filed for Chapter 11 bankruptcy, marking the end of an era for the once dominant retailer. The bankruptcy process resulted in the closure of hundreds of stores, leaving only a handful of locations still in operation. While Eddie Lampert's hedge fund purchased the company's remaining assets, efforts to revive the brand have been largely unsuccessful. Sears is now a fraction of its former self, and its future remains uncertain. The decline of Sears offers important lessons for businesses. Companies must adjust to changing markets. Sears' reluctance to embrace e-commerce left it vulnerable. While diversification has its benefits, it shouldn't overshadow a company's main business. Sears lost focus on retail. Poor store conditions and customer service drove shoppers away. Investing in the customer experience is vital. Brands need to innovate continuously. Sears, once a leader, became stagnant and failed to evolve. Effective leadership is crucial for growth, and Sears' decline can be traced to mismanagement under Eddie Lampert. Sears' story is tragic. It evolved from a mail-order catalog to a retail giant, but ultimately failed due to a lack of adaptability and innovation. Its decline reminds us that no business is immune to change, agility, and a focus on customers are essential for survival. We would love to hear your thoughts in the comments. Don't forget to like and subscribe for more content like this.